I'm Stephanie Link. I'm co-portfolio manager of Action Alerts Plus, and here with me today is Jim Cramer. We wanted to talk a little bit about what's happening in the market on a rotation basis. In the last couple of weeks, we've seen a clear rotation into the cyclical stocks and away from the defensives. And so we've made a couple of changes, but Jim, our portfolio is actually positioned for this kind of a change.
Yeah, when you take a look at what happened to us, so to speak, what we don't have we're not can't be nimble like a hedge fund. I know a lot of people feel we could be, but it just, our rules don't allow us. It's not the nature of Action Alerts. And what we did was we said, okay, look, there's going to be a turn in the U.S. economy. We're going to get an employment number that's going to be good. We're going to get Europe to come back. So what we have to do is we can't have nothing but PepsiCo, because what will happen is that we'll be caught flat-footed in the rotation. So we had to anticipate the rotation. To anticipate the rotation meant that you're going to drop a couple hundred basis points. And now you catch up, and where we are positioned now, and continue to make these little moves like a Joy Global, what we're positioned now for the idea that there could be worldwide growth, and the people who are just sitting there doing nothing but being Coca-Cola are not going to participate. So, we do have enough stocks that will, so-called do nothing, but ours have good yields. I mean, we have Kinder Morgan with good yield. We have Glaxo with a good yield. Merck is one of the highest yielding drug stocks. So we're not out of the game by having some of those. But we're not people who play the rotations. We are people who got in ahead of the big turn, and we paid for it.
We did, and I'll tell you, the most frustrating thing to me, and we both talk about this endlessly, is the valuations of the staples, of healthcare, of utilities got so expensive. And so we were in Coke, but we sold it at 18 times forward estimates. We were in Mondelez, we sold it at 19 times forward estimates. Those are very rich multiples for 2-3% organic growth. And if you looked at some of the cyclicals, like the industrials, like the miners, I mean, we have suffered a little bit with the Vale, but we think that long term, the valuation is pretty compelling. The company's doing all the right things. And also in some of these industrials, the valuations are cheap. And so that brings me to Joy Global. This is one that we actually added to. We're going to buy small because we know it's a very high beta name. It's directly tied to what's going on in China. But we think that there's some value here.
Yeah, I mean, one of the things that you have to suss out. I had Mark Papo on last night. It's the largest independent oil company in the country, EOG. And he had been very bearish on natural gas. He felt it was going to be $2.50 for a long time. He upped his forecast on Mad Money, saying it's going to be $4.50. That is where coal is vastly more competitive. It's only, you switch if you're a utility if natural gas goes above $3.50. So suddenly you have Norfolk Southern saying coal's bottom, they're starting to ship more. You have the natural gas being lacking in competition. So inventories goes down in coal. When you have that happen, you've got to dig for coal. In China, they keep putting up coal plants. In India, they keep putting up coal plants. They're decommissioning nuclear plants all over the world. So what you have is something that has some price elasticity. It's gone down to the point people are going to use it. Joy Global has a diversified revenue stream of the maintenance of its equipment and new orders, and no one's expecting any pickup in new orders. That's precisely when you buy a very inexpensive Caterpillar. That's what it is, an inexpensive Caterpillar.
That's right, and then we also got interesting excavator sales
so
trends in China this week, where April was up 6%, the best number in 2 years. So, look, they have easy comparisons, so the number should start to look better. And they're not out of the woods, though. We know that. No. But again, as you say, at this valuation, it's discounting a lot of bad.
Right, and look, I mean, I think we're trying to, in Action Alerts, when there's cyclicals that we're very close to, Mike Sutherland, who's the terrific CEO of Joy, we recognize that it's been 55.60, 55.60, 55.60. So, look, will we like to buy it at 55? We would have loved to buy Caterpillar at 82. I mean, there's a lot of things that we would have loved to do, and it's woulda, shoulda, coulda, it plays no role. But we have Timken, we have Eaton. A lot of people wanted us to sell Eaton at 60, declare victory. I talked about that back and forth. Now that stock's off to the races. We have a CBI. Yes, it went to 63. Would have been great to if a hedge fund would knock it out, but we didn't, because we think there's long-term growth. ADT, a housing play where the company did not deliver this quarter but could deliver next quarter. These are all what could work within the next quarter. And Joy may be the best example of a stock that could go to 75 rather quickly.
Great, so we'll continue to add.
Yeah.
Thanks, I'm Stephanie Link.